So hi, we've got Dave here on the other end of the phone. I'm going to let Dave introduce himself. Dave is one of our preferred mortgage brokers. So, Dave, over to you in a nutshell. Who do you work for? And yeah, tell us a bit about yourself.
Okay, hi. My name is Dave, as Chris says. So I'm the director of OME Mortgages Specialists. We are a whole-of-market independent mortgage broker. We specialise basically in helping anybody who is expatriate, a foreign national living overseas, or a UK resident looking to buy predominantly buy-to-let properties within limited companies or in your own name. But we also are able to help with standard residential purchases, transfers, you name it.
What do you mean by all of market, Dave? When you say we're all of market, what does that mean?
Okay, so that means, so we're independently authorised, when we're directly authorised by the Financial Conduct Authority. So that means that we have access to the whole of the market. We are a broker that can basically look at every single potential solution. We're not tied to a particular company or a particular route. Some advisors go through networks, and if you're through a network, they may only have a range of lenders that they will pick their solutions from. Because I'm not tied to any network or any particular company, I have full access to the whole market, and therefore I can make sure that any mortgage application or process that we're choosing is going to be the most suitable for every client.
Gotcha. Perfect. So look, the main reason why I wanted to sort of get you on the line today is sort of chat about the recent difference or imploding and then exploding in the mortgage side of things, where we've got over lockdown, we saw a lot of lenders go away from the market, from what I was hearing, and then suddenly we've now seen a lot of lenders come back to the market in big in droves. But obviously, I'm guessing it's a bit of a different dynamic. So, if you could sort of, in a nutshell, explain what's happened in the last sort of 3-4 months, what would you say?
Well, initially, I've 28 years working in financial services. And latterly, the last 7 years working as a specialist mortgage broker. And there's never been as much change in a market in such a short period of time in any of those 28 years, even with financial crashes, etc. Effectively, what happened was, once the lockdown was announced, the biggest problem that caused was the fact that valuations couldn't happen on properties because of social exclusion rules, etc. And that meant that high lending residential mortgages, so somewhere between 70-75% upwards, and new build specialist properties where you had to have a physical valuation, all those were suspended overnight. And lenders basically looked at that in two ways. There were lenders that said, okay, we can't continue with the applications that we've got, so we'll put them on a shelf, we'll put them on hold until such time as we can. And then there were lenders that basically said, okay, we can't continue with this, so we're basically cancelling all applications that we've got, which obviously had shockwaves initially going down the market because of deadlines that clients had. Now, when the dust settled, the world obviously was affected, so people started to be a little bit more realistic. It did cause a huge problem initially. When the lockdown was relaxed and we could get valuations done again, lenders started coming back to the market. Now, initially they were having reservations, and some were restricting the type of properties they were lending to, or they were restricting the maximum loan, so 65% instead of 75 or 80, or they wouldn't lend over a certain type of property. So some weren't doing new build flats for a while, some were only doing 70% mortgages. And you found on the residential market that a lot of lenders weren't doing 90% mortgages anymore. They would do maybe 85. When there was a 90% product available, it was snapped up within hours. I myself managed to get a mortgage for a client, and the opportunity for this particular product was only available for 2 hours. It became out and people were aware of it, and it was gone because they only do so many mortgages. That's never been known before. We're now in a more stable situation. We're now coming back to the normal world. There are still some lenders that aren't lending. They haven't fully come back to the market. Because of their funding issues, they've decided to take a step back. And there are some lenders that are changing their minds in what they will lend and what they won't lend. The big sort of take from this is that there's never been a more important time to speak to a mortgage broker or a mortgage specialist about sorting a mortgage out, because what you think is available on the market may well not be, and the processes that lenders are going through can be a little bit more complicated now. They're not necessarily not lending to you, but the hoops that you have to go through are maybe a little bit more. So having someone that knows how to navigate your way around that market is going to be such a benefit to you rather than trying to do it yourself.
Perfect. I mean, in regards to overseas investors as well, How has the landscape changed for them? Has it changed for them? Have you noticed any difference from lenders' criteria?
Yeah, the overseas market wasn't necessarily a hit as bad as the UK residential market, because there's only so many lenders that will lend to people overseas anyway. And depending on which country you live in and what your circumstances will dictate what those lenders are that will lend to you. The majority of them did exactly the same as the UK. They initially dropped down from maybe lending 75% on a new build flat to possibly lending 65%. But then there are those lenders that if you had an application at 65% and they've now gone back up to 75%, they'll increase that application back up to 75%. So there was a temporary sort of reduction and sort of squeezing of what was available, but that's now eased. There are still a couple of lenders that significantly aren't back into the market where they were, but they may well be lenders that you probably may well not have got to anyway. They were like the third tier of lenders. So before, if you can't get a mainstream lender or a specialist lender, then you move to these sort of lenders. Those they're still playing around. They're still doing slightly lower levels, or they're accepting slightly different criteria. But essentially, it hasn't changed. If you were an expatriate living in Dubai, or you're living in China, or you're a Chinese national in China, or etc., then the essence of who will lend to you hasn't changed. Again, it may just be a little bit more complicated, the process. On the flip side of that, there are some lenders that have adopted finally some new technologies. So we were allowed to use electronic verification. I now use a facial recognition system and electronic verification, which I can use for certifying passports and authorizing identification, stuff like that. And some lenders are accepting those now, whereas before, a lot of lenders still insisted on paper documents. So there has been some steps forward, and over the next 6 to 12 months, I think there'll be some much bigger steps forward in terms of processes, electronics, because people have realized that actually it's a lot quicker and a lot easier and a lot safer to use some of these modern technologies, which the FCA very brilliantly said to lenders, you need to start adopting them, because obviously that's how the market moved.
So how do you think the market's going to change in two ways? First of all, based on what you said, do you think the market's actually going to get more efficient due to this? That's the first question. And secondly, how do you feel it's going to be impacted by lenders coming back to the market? Do you feel in 6 months, as long as everything goes all right with no major impact from a second wave, how do you feel the market's going to be impacted? Do you think we're going to be back to normal? Do you think we're going to be in a better position? Where do you think we're going to go?
I think initially, as we are now, there's a transition period there's a lot of catch up, because unfortunately there's a lot of customers and clients that were caught in the middle from February till June, July time, where there was realistically everyone was treading water, or they had applications decline and had to restart. So there was a huge backlog of cases, which caused lenders to the processing time. They've gone from, say, a 24-hour turnaround to a 72-hour, even a 96-hour turnaround. And that's like looking at a document. So you send someone a bank statement, it might take them 4 days to look at that bank statement, whereas before it was 24 hours they'd come back to you and things like that. That process is now starting to ease, and there's a couple of lenders this week who've actually taken off some of the restrictions they had in terms of processing. They wanted to make sure that extra due diligence was done, because there's an impact in people's income. Obviously, with the furlough and the various business incentives, they wanted to make sure that customers are going to be able to afford to buy, commit to these properties and mortgages, etc. So there's a few more checks and balances done on that side. That's now starting to ease. Some lenders have adopted technology big time. Some lenders are thinking about doing it, and there are still some that are still carrying on doing exactly the same as they were doing before. I certainly think what will happen in a year's time, we'll probably notice a difference of those that have adopted the new technologies are being rewarded because they're getting much more business, because it's going through a lot quicker. Those that are on the fence and are thinking of doing it will probably prompt them to make the decision quicker and get the processes put in there. And hopefully it will also move the ones that are still in the dinosaur age, where they're wanting paper applications and paper and real signatures, etc. They'll start moving forward as well. The market is massively buoyant at the moment. I mean, I have never been as busy as in the 2.5 years that this company's been going. I've never been that busy, and certainly in the last 6-7 years, we've never been that busy. And it's all positive movements.
In regards, and this is the last question, Dave, as I say, you mentioned you're busy there, so I won't take too much of your time. In regards to
okay.
in regards to the last question, what advice would you give people who are potentially buying now? So, if, for example, we're quite flexible. We work with a lot of developers who are really flexible on payment plans. So, for example, even if there's a property that's ready now, some developers are willing to say, look, we'll wait 3 months to exchange it if a client feels that they can get a better rate. Do you feel that, because obviously the Bank of England, they cut the rates as an emergency cut, has that been fed down? Do you feel that lenders will start to, and if it hasn't, do you feel that lenders will start to feed that down later down the line, maybe 3 months? Do you think that there's benefits from clients to wait 3 months to actually get a mortgage? Or do you think now's the right time? Or, what's your opinion on that?
That's a good question, actually. I mean, as far as rates go, when the Bank of England cut the rates, the biggest effect of that was that most lenders suspended their tracker mortgages. They stopped applications for new tracker mortgages, and they suspended ones that they had. And obviously, because a tracker by its very nature would follow the base rate down, and it would meant that happened in the early 2000s when the base rate fell, that there were people actually that were in negative. So in theory, they were paying the bank to borrow money. Or the bank was paying them to borrow money, sorry. So tracker mortgages sort of stopped, and there's very few tracker mortgages, if any, on the market available now. Rate-wise, there's no real massive change in terms of the rate because of the interest rates that lenders are offering because of the interest rate. What has happened, and what is happening, is lenders are, I've never seen so many changes in such a short period of time. In any given week, there must be easily 15, 20, 30 changes of products going on. And that's lenders coming to the market, and they're announcing some new products, and they're dropping the interest rates by X amount, 0.1%, 0.25%. And then 3 days later, they're saying those products have now been withdrawn, and we're putting rates up by 0.1, 0.25. And most of this is to control business, because they've still got staff that are furloughed. They've still got people working remotely from offices. So processes are taking a little bit longer. So what they're doing is controlling the business by putting rates up and rates down. And that's the biggest effect. Once that levels itself out, we'll be back to where we are. There's no real changes, I think, in rates to delay. The thing that people need to bear in mind is it can take longer to get a mortgage application, because even now there's still potentially 2-week queues for valuations. So if you are buying a property and you are considering buying a property, I would always say the best thing is to speak to a mortgage specialist first, get a good understanding of what is available to you and how long the timeframes will be. And then you can then filter that in and work together with the guys like Chris and the property professionals, because then the two sort of dovetail together, and you can make sure that not only can you get the property reserved at the right time, but also you're moving towards completion because your mortgage is on track as well, and it all works very smoothly.
Getcha. And sorry, mate, I do have one last question. How many, how many mortgages, buy-to-let mortgages this is, because obviously that's our main bag here in terms of the investment side. How many mortgages would you say are actually on the market? Because I think that a lot of clients think that there might be 5 or 10 or things like that. But when I've spoke with sort of different mortgage brokers, I've been surprised to know that there's a huge amount, not even hundreds, but going into thousands. But I mean, in terms of accessibility, how many sort of mortgages are particularly on the market?
Oh, there's no easy answer to that. There is, at any given time, there's over 5,000 mortgage products available easily at any given time. But it then obviously narrows down to what you're particularly looking for. So of those 5,000, there's going to be so many that are residential and so many that are buy-to-let. And then obviously, if you're then looking at buy-to-let, all different categories, there's always a choice of products. There's always a wide range of choice of products. The factors you have to be aware of is, as opposed to when you're buying a residential, as opposed to a buy-to-let, when you're buying an investment property, there's different type of criteria that people look at. So if you're an existing landlord or an existing property owner, if you've got more than 3 properties, if you're buying a certain type of new build property, if it's over so many floors, if it's in a different location, there are all several different factors which will then sort of work your way down to a finite amount of lenders. Now, typically, there's always a wide choice of lenders, but you'll find if there's a property that's got 130 units in that property, there won't be one lender that would lend to everybody on that property. Each lender might only do a percentage. They might only have a limited amount of mortgages that they would do in that development, because they don't want to have too big a share in case there's ever see a downturn in the market and they've all got 130 clients in there. So they might take a percentage. So that's why the onus basically is to as earliest as possible is discuss what your options are for mortgages and get the process going, because that way you're getting the best choice of the lenders that are available. It doesn't mean to say that if you're late in the day that you might not get the best choice, but there certainly are. I have a lot of clients that come to me because they've been with various other brokers who maybe not specialised, and they're struggling to find the right lender. And the lender is there. It's very easy to find. The problem is, by the time they come to me, they could be 2 months behind everybody else. So then we're playing catch up and trying to get the mortgage completed on time. So the earliest opportunity you can speak to gives you the widest choice, but there's always plenty of scope if you know where to look.
Perfect. Dave, you're a star. Thanks, mate. Much appreciated.
Right.
And as I say, so we obviously refer a lot of people to you, and hopefully people will be listening to this and they can understand the market, and you've given a decent bit of clarity there where we are and where we're going. So thanks again, Dave, and take care. Speak to you soon.
Pleasure. All right. Thanks, Chris.
Bye,
Take
mate.
care.
Bye-bye. Bye.